Do you guys have extra money in hand and you don't know where to put it? It could be very tempting to go to the mall and have a shopping spree, but if you think about it, is that really worth it? You have worked so hard for that money, so you should reward yourself by putting it in the right places. What places am I talking about? Keep watching. In this video, we are looking at the top 5 best investment options for your money. But before we start giving you the options, let me first tell you why you should start considering investing your money. For some people, when they hear the word investing, the first thing that pops into their heads are images of men in suits monitoring the exchange of millions of dollars on a stock ticker. I don't blame them, but let us tell you that you don't need to be the wolf of Wall Street to start investing. These big investors must have started from somewhere small, right? Right now, it's okay if you're more of a mouse of Main Street because you are just starting out. Even if you only have a few dollars to spare, your money will surely grow with compound interest. Investing is easy once you know your way around things. Just like Halloween costumes, it comes in many different forms. It shouldn't be a scary word. Whether it's opening a savings account, investing in your retirement, or the real estate market, investing for beginners is simpler and more straightforward than ever before. After watching this video, you'll see how addictive growing your money can be. Number 5. Mutual funds. Rather than buying a single stock, why not buy a basket of stocks in one purchase? Mutual funds pull together your money from a group of investors and invest it into different securities such as stocks, bonds, money market accounts, and more. Funds have different investment objectives, to which their portfolio are patterned. Money managers are responsible for each fund. They generate income for investors by allocating assets within the fund. Mutual funds can hold many different securities, which makes them very attractive investment options. Diversification is one of the best reasons why you should consider investing in mutual funds. The underlying theme here is that you shouldn't put all your eggs in one basket. So it's best not to invest in one industry or one type of investment vehicle. Unlike stocks, investors can put a small amount of money into one or more funds and access a diverse pool of investment options. So you can buy units in a mutual fund that invests in as many as 20 to 30 different securities. In the stock market, you'd have to invest much more capital to get the same results. Number 4. Real estate. No, I'm not talking about the house that you live in. Where would you live then, huh? What I'm referring to is the second property that you buy that can serve as your investment. If you accumulate $2.8 million in income-producing real estate, it will pay $50,000 a year in income and continue to appreciate in value over the years, not only covering you indefinitely, but also leaving you something to pass on to your children. Here's the interesting part. It only takes $700,000 in investment capital to accumulate $2.8 million in real estate assets. That's a huge return of investment. Real estate offers predictable cash flow. It appreciates in value, thus keeping up with inflation. It also provides a higher return because of positive leverage, and it offers equity growth through debt reduction. Investments in real estate deliver returns in two ways: capital appreciation and rentals. You just have to find the right location because this will largely determine the value of the property and the rental that it can earn. Number 3. Municipal bonds. When a government at the state or local level needs to borrow money, they don't use a credit card. Instead, the government entity issues a municipal bond. These bonds, also known as munis, are exempt from federal income tax, making them a smart investment for people who are trying to minimize their exposure to taxes. Muni tax issues can be tricky, so you should always check your local tax laws to be sure. If you invest in a municipal bond issued in another state, you will probably have to pay taxes. If we look at the tax advantage, a completely tax-free municipal bond will usually present a more profitable opportunity. What makes municipal bonds so safe? Not only do you avoid income tax, which means a higher return compared to an equally risky investment that is taxed, but the likelihood of the borrower defaulting is very low. There have been some enormous municipality bankruptcies in recent years, but this is very rare. Governments can always raise taxes or issue new debt to pay off old debt, which makes holding a municipal bond a pretty safe bet. This is good investment for people with high incomes, such as celebrities living in states with high income taxes, such as California. A retiree with a limited income living in a state without income taxes, such as Florida, benefits less from the tax exemptions of municipal bonds. Number 2, direct equity. Investing in stocks may not be everyone's cup of tea, as it is a volatile asset class and there is no guarantee of returns. Further, not only is it difficult to pick the right stock, timing your entry and exit is also not easy. Equity stocks have the potential to bring the investor extremely high returns over a much shorter period. Investing in stocks can be tricky and is usually only done by individuals with an in-depth understanding of market conditions. When we invest in the equity shares of a company, we are, in legal terms, buying the ownership of that company. The total amount that a company plans to raise is divided into small fractions called shares. We become the owner of the company subject to the number of shares we own. A share is an individual unit of capital expressing the ownership relationship between the company and the shareholder. Our earnings are highly dependent on the performance of the company that we chose to buy stocks in. Therefore, before investing, it is best to be very familiar with our chosen company. This will ensure a huge return of investment in the future. Number 1, Exchange Traded Fund, or ETF. An exchange-traded fund is a type of security that involves a collection of securities, such as stocks, that often tracks an underlying index, although they can invest in any number of industry sectors or use various strategies. ETFs are in many ways similar to mutual funds, but they are listed on exchanges, and ETF shares trade throughout the day just like ordinary stock. The price of an ETF share will change throughout the trading day as the shares are bought and sold on the market. This is unlike mutual funds, which are not traded on an exchange and trade only once per day after the markets close. There are various types of ETFs available to investors that can be used for income generation, speculation, price increases, and to hedge or partly offset risk in an investor's portfolio. Some examples are bond ETFs, which include government bonds, corporate bonds, and state and local bonds called municipal bonds. Industry ETFs, which track a particular industry such as technology, banking, or the oil and gas sector. Commodity ETFs, which invest in commodities including crude oil or gold and more. If you are thinking of investing in ETFs, the largest average annual return recorded is at 7.6%. I know, impressive, right? It is important to note that an ETF is a bond but trades like a stock and is backed by an issuer like a bank. Be sure to check with your broker to determine if an ETF is a right fit for your portfolio. Well, there you go. You just found out the top 5 best investment options for your money. Which among these do you think is the best investment option? Update us in the comment section below. That's all for now. Thanks for watching. If you had fun with the video, please hit that like and subscribe button and also turn on your bell notifications so you don't miss any of our next videos. Tune in for more of the best and most interesting topics on the internet. I'll see you guys next time.